Alright, hi guys, it's your boy JB, and this is my weekly analysis on gold. Gold has generally been on an uptrend since the beginning of this year. Actually started way back last year, and it has been creating series of higher highs, higher lows, higher highs, higher lows, and then another higher high here, and we have a higher low, and then a higher high to a higher low, and to our most recent higher high, which I believe is confirmed. Now, how do I know it's confirmed? So when you go to the smaller time frame, you take the 15 minutes time frame. Alright, so before I go to the 15 minutes time frame, let me mark the zone from where price took an aggressive sell to indicate reduction in the buy momentum. So here's the zone. Let me draw a shape around this region. Okay, around this region. Okay, so we're going to move to the 15 minutes time frame, and yeah, so there we have it. Price formed a higher low. Here was our swing low at this point, where if price breaks, will confirm a switch in our swing structure. So price formed an internal higher low, and then from there it formed a higher high. Price closed above the recent higher high, so we have a higher high, higher low, and then a higher high, which turns out to be the all-time high of gold, and price closed above it. What happened was that price returned to the recent higher low, and what happened is it closed below it, signaling a switch of internal structure. What we would have expected is that price would retrace a bit, and then to the recent swing low, and then there would be a bullish move. But that didn't happen. What happened is that price actually closed below the swing low at this point, signaling a switch of swing direction from the upside to the downside. And so this is why our high here is confirmed. So it will mean that correction from the huge impulse since last 2 weeks has now begun. So this high is protected. It will take gold correcting to at least 38.6 Fibonacci level on the daily time frame before this high may be broken. Okay, so now that we have a confirmation of our all-time high, also there is a confluence to why the high is confirmed, and the other reason why our high is confirmed is, let me delete this. There was aggressive institutional involvement when price got to 37 level. Now, how do I know this? Before price would even get to 2,700, US dollars on gold. I expected price to finish at the 1.61 Fibonacci extension levels. So here, let me draw the Fibonacci level. So we have this high, and then pull it down to the higher low, and then pull it down to the higher low. And here, this is our 1.618 Fib extension level at 2,737. And so around this region, I was expecting aggressive institutional orders anytime around this zone. Actually, what happened is that price went further beyond that zone, nearly to 2 extension level, but it didn't reach there. And so what happened on the 4-hour time frame is that you know that in forex, whenever price gets to the institutional levels, we see aggressive involvement of the institutions in the market movement. So what happened is that there was a huge sell which broke down to this 9 moving average, and now got to this point. This moving average, the green line that you are seeing there, is the moving average, and price broke down to that point, signaling institutional involvement, also signaling reversal of price. Alright, so as I said, my confluence for the beginning of a correction of the huge impulsive move from, please take note of the crosshairs as they move on the screen. These are like my pointer for the screen. Okay, so price has begun a correction after the huge impulse from this point at 2,600 to beyond 2,700. That's what you can see on the black line here, up to this all-time high at 2,758.84. And now we have a confirmed change in direction, which could see price retrace down to at least 38.6 Fibonacci level. So I'm going to draw the Fibonacci retracement line here, and then pull it from this higher low all up to the all-time higher high that has been formed. So I expect price to correct down to from this level down to at least 38.2 Fibonacci level before, depending on reaction of price, before we can see a change, a continual bullish move to the upside, which is going to break our all-time high that we have here. So here is the possible scenario. Let me draw this. So from the correction down to the 38.2 Fib level, then we can see a continual bullish move to about $2,800. Here's the scenario. Now another possible scenario we may observe is that price can move down to as low as 61.8 Fib level before we can see price spiking up, but that is quite unlikely because of how the bullish momentum has been very aggressive with gold. So I am going to delete this. Now, how are you going to trade gold in this coming week? Let's not touch. So delete this. So I'm going to mark the 38.2 Fibonacci level. I'll mark this point. And then I'll delete the Fibonacci to. So we expect price to move at least to this level before we may see institutional involvement in price action to the upside, continuing the general bullish trend. And so how are we going to trade gold in next week? From Monday onwards, what we expect to happen with gold is that we already have seen a spike to the downside, which broke through the 9 moving average, which is the green line, and that indicates strong institutional involvement in price, sending price downwards. From here, since when the impulse starts, broke through the 9 moving average to the upside, we've never really seen a strong enough push through the downside through the 9 moving average until price got to about at this all-time high, broke through at this zone, and then we have it here playing out. Now this is a pullback. Price is going to sell from here to this black line, which is our 38.2 Fibonacci level. So if you are going to take a swing sell, you set your sell. You can take an aggressive sell at this point and then target. You can take an aggressive sell when market opens, and then excuse me, and then target what am I going to do for custom measurements? Short position. So you can take an aggressive sell from here and then target the last low on the 4-hour time frame. That is a reasonable take profit level. But if you want to go further, if you want to be ambitious, more ambitious, you can target the 38.2 Fibonacci level. Price must get down to this point. Okay, so that's how we are going to trade from next week, starting Monday tomorrow. On the 5 minutes, 15 minutes time frame, what we are seeing is that price has formed a higher high, lower high, higher high, lower high, higher high, lower high, higher high, then another lower high, and now we have a higher high, which should bring price down to a lower high before we are likely to see yet another higher high, which will break. So let me draw the direction that I expect price to take. Here's the scenario I expect to play out. So we are going to see a pullback to this level and then break of that higher high to this point, and I expect a break of structure, breaking this low, higher low to this point, and then we'll see a pullback confirming a break of structure. Here you can take a sell here and then put your stop loss here. From here, trust me, price is going down. Okay, so that's what we have here. So this is the scenario I expect to play out. So this is my general overview of the market in gold, with gold in this coming week. I want you to kindly note that this analysis is for educational purpose only and not to be taken as an investment advice. So please do cautiously and kindly observe money management rules. Thank you very much. See you another time.